Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we finally will take a look at the euro currency because market suddenly has brought some clarity on the perspectives that we could expect in the nearest future in the euro currency. Mostly this has happened due, as you can see, collapse that we've got on Friday on inflation data that has been released in the United States. So this is the daily chart. And currently we have two-sided situation on the euro currency. The first one is mostly stance by letter, so formal situation. But this situation is gradually starting to change. And we will start first from the by letter situation. Mostly it is based on the patterns that we have discussed recently. And as you know, last couple of weeks we talked a lot about this Gartle's triple to buy pattern and potential reverse head and shoulders that should trigger the upward action right to the 116 area. That being said, by letter and theoretically, these patterns are still valid because the crucial point for Gartle's triple two is 109 area. This is the point where market has turned to the upside and starting to form extension mode, extension stage in the market. So this was extension, contraction, retracement, and extension again. So this should be some straight action to the 116 target. Just would like to remind you guys that 116 target is the minor extension. It's 618 extension, not even the 100% extension, just minor target. Finally, as we said, this extension could take the shape of the reverse head and shoulders. So this could be left shoulder, head. Now market is forming right shoulder. And target of the head and shoulders, this A, B, C bottom, D pattern should become particularly the extension that should lead market to the target of the greater pattern. So that's the background that we have discussed. And theoretically, this background is still valid because, as I said, 109 is the invalidation point of the Gartle's triple two buy, because this is mostly even the weekly pattern rather than daily. And 111 area is the invalidation point for the head and shoulders. And you can see market formally, technically, still stands above this level. So we can't say yet that the head and shoulders has failed because this hasn't happened yet. At the same time, guys, we see some important behavior that stands around of this inside of this red circle. And this behavior is irrational for normal head and shoulders pattern. I mean the reverse head and shoulders pattern. Following this logic and analyzing the market mechanics of this pattern, we could come to important conclusions that could clarify what we could get in the nearest future. Let's go step by step. First of all, we will start from the bottom of the right shoulder. As soon as it has been formed, right here, market has shown pretty nice action to the upside, and we even have traded it. That was even our minimum target. If you remember, some week we have traded it right to the 113.50 area. This was neckline, and we said probably the minimum target will be to reach the neckline. This has happened. Initially, this action has been triggered by poor ISM manufacturing, it's right here. Later, it was supported by the poor non-farm payrolls data. And as a result, market has reached the neckline. But even on this day, it has returned right back down and pulled down out from the neckline. This was the bit warning sign for the head and shoulders, because we know, following the market mechanics, when in the final part of the head and shoulders pattern, the control of the market should be taken by the bulls, because this reversal pattern here is bears still control the market how the hand shoulders works. In fact, the downward action is the attempt of the bears to show downward continuation, downward action. And the second part is in fact, the capitulation of the bears to do this. That's why when you see, in fact, on the final stage of the hand shoulders pattern, that bulls wasn't able to push market through the neckline, and it has led to the drop and pullback. You understand that something is wrong here. So this market behaves a bit curiously. That we should not get such sort of the action when market stands on the eve of the breakout through the neckline. Okay? Alright. When this has happened, we said let's wait a bit and see what will happen. Market has dropped to some inner strong support area on the 4-hour time frame chart. We have talked about this confluence support, and turns to some significant, some long-term consolidation. On the way, while market is forming this consolidation, multiple stop grabbers, bullish stop grabbers have been formed here. So I could even show you probably know by yourself already. As you can see, almost every session was the bullish stop grabber, but market wasn't able to show the upward continuation of these grabbers. And finally, the final drop was yesterday, as the market just collapsed based on the poor inflation data. So, sorry, vice versa, the good inflation data. Still, we probably could appeal and could argue that, well, what will happen if market will form, say, the butterfly here? For example, if it will become the left wing, that will become the right wing, because market still stands above the 111. So it still could form the butterfly and show the upward breakout. Well, theoretically this is possible, but this collapse is not very good sign for the wing of the butterfly pattern. Because usually market should show the gradual action inside of the butterfly. It should not show any collapse, such strong action down. That's why we think that although theoretically, as I said by letter, all these bullish patterns are still valid, but reality stands so that currently it's a bit dangerous to follow these patterns. They are not broken yet, but the chances of the breakout significantly increased since our last discussion. That's why our call here to not take any longs position here and stay aside from the longs by far. Now we will turn to the intraday charts, and you'll see another signs of weakness on the market. So first, on the 4-hour time frame chart, take a look what has happened in this consolidation. This is very interesting behavior. So take a look that these long tails is nothing more but attempt of the market to continue bullish trend. So that was the challenging of the market to continue bull trend, and all these attempts have failed. So it means that here market has met very strong sell-off that has prevented the upward continuation. So you can see how much attempts have been made here, and all of them have failed. This is in fact, as I've written here, inability of the market to restart upward trend. This is indeed so. Because take a look at the market mechanics, very good thrusting action. So ISM, payrolls, starting retracement down. Yes, it was a bit fast, but take a look what has happened. Market has completed this A, B, C equal D right at the fib support, this 112 area. This is agreement support. Normally, when the market stands in the bullish reversal pattern, it would suggest the normal bullish market should hold above the agreement support and reestablish upward action. Yes, market was able to hold here, but it was not able to restart the bullish action. And that means that this moment is not just some kind of the retracement up from this support and downward continuation. This is the moment of maybe some kind of the reversal or breakout from the bullish tendency to the bearish tendency. This is what we see right now on the euro currency. And as a result, market has collapsed. Also, take a look at what kind of the action here and what kind of the action here, here, and here. Every time when the market is standing in an extension mode, this is extension, contraction, extension, contraction, extension. Every time when market stands an extension, it shows acceleration, very fast action. Market has dropped precisely directly to the 1618 target by breaking 112 area. This is very bearish sign. That's why currently, guys, we do not really believe with the appearing of the butterfly. If only something drastic will happen, or if Fed will announce very dovish comments probably in September, that could happen. But following the current technical picture, the chances of the appearing of the butterfly very small. On the hourly chart, market has completed also this wide A, B, C top equal D pattern. Okay. Also, this is a minor A, B, C top 1618 as we saw here. It means that in the beginning of the session we could see some upward retracement, minor retracement. Most probable destination of this retracement stands around 112 area. Because, guys, this will be, as you can see, the lower border of the previous consolidation. Market usually protects the former consolidations from the market return back, from the price returning. Also, this will be confidence resistance, 1212, 1216 area. This is an area around weekly pivot point, and I don't have it on this chart, but it seems, guys, that it also will be the 50% resistance of this whole downward action. It's most recent downward action. So this will be a very probable destination of the retracement. Currently, guys, you should correct us. You should understand us correctly that we can't call you to anticipate the possible downward breakout, because this is a bit dangerous and it's not suitable for everybody. But if you feel that you could try to do this, if you feel that you have the sufficient experience, you could watch for 112, 112.16 area for a possible taking short with the anticipation of this breakout to the downside. Because you understand that at the eve of the Fed statement, Fed comment, we can't just call you to take the position. Mostly because after the breakout 111 will happen. You could do this absolutely the same as taking the short, but this will be much safer. That's why this is not suitable for everybody. But if you would like to do this, you could try, because overall situation technical looks bearish. And if you're searching for the resistance that might be useful for that, well, take a look at this resistance cluster that stands around 112 area. Also, for scalp traders, if you trade on the hourly chart, on the 15-minute chart, you could watch for this thrust down, because it could become the background for the Napoli directional patterns. For example, it could be double report that will trigger upward retracement. Maybe it could be the bread and butter or something of that sort. This is only for scalp traders who trade on the very short-term scale. So that's all for today on the euro currency. As you can see, situation again becomes interesting. And technical, guys, situation looks more bearish than it was in the previous 2 weeks. So it might happen that even on the current week we will get the breakout for the 111 area, and that could trigger the chain reaction that will lead to the breakout 109 as well. So that could this consolidation, the breakout on this minor consolidation on the hourly chart, could become the crucial point of the overall medium-term perspective on the euro currency. That's what we'll see right now on this chart.